So by now you have watched many of the DTB traders videos. You've watched all the indicator videos and hopefully found some that really piqued your interest. And you're well on your way to understanding the DTB system. So what we're going to do now is we're just going to pull up a few charts and we're going to see how we can combine a few of these indicators and a few of these charts into being able to read the market clearer. So what we'll be doing is we'll be just bringing up a new chart. So let's start off with this. So let's work on the MNQ in this example. So starting new to trading or starting new to futures trading and even new to the DTB system, you might want to experiment first with trading the micros till you become really familiar with the system and then run it on your own, choosing whichever instrument that you actually work with. So I like to load up a 195. So I think the standard default settings for the MNQ or for the DTB bars is a 195 with 5 days. Now I always remove break at end of day, so it's important to remove break at end of day on your DTB bars. So you do that, and what that's going to do, it's going to just bring up a chart. Okay, so currently that is what a 195 chart looks like. I'm just going to disable the video so there's not too much things on the screen, and then we can go through all the details. Okay, so there's a 195 chart, and a few minutes ago I actually watched this new baseline form. So the price was trading this downwards trending baseline basically the entire day. So since market open, if I right click on the chart and I go to data series, I should be able to add the trading hours, not the trading hours, the break between the days. Where is that again? Trading hours break line. There we go. So that just shows you where the current trading day started. Okay, so 31st. Okay, so what was happening, it was traveling this time, so all the way up until the end, and now we are getting to, so basically the end of the day, because it was a holiday yesterday in the US. This price was trending on this wick, and it actually broke a baseline only a few minutes ago. So if we look at the time now, it is 2:52 and the baseline broke at 2:38. So very often after a baseline break, the price is going to run up, and so far it's run up 53 ticks. So even if your strategy is to enter a position the moment of a baseline break, there's a very high likelihood that the price is going to run up for a while, even run for a period of time, and that's on any chart. So you can go and open up any chart in your thing. So even if I go like a 1 and I go 330, and let's just go 10 days on this. So I right click on the bottom tab over here and I go duplicate in new tab. That's how you can basically do it. So I'm going to go to this one here and I'm going to go let's go a 1,500. Just literally any number that you put in is going to bring up a trending baseline chart. If you're putting the first number as a smaller number, like we've got over there, and the second number as the larger number. So on this one here, it went up 53 ticks. Here is a 1,330 chart. And this one over here, it broke a baseline and it's traveled 115 ticks. And if we scroll further back in the chart, you're going to notice a very long baseline running over there. That one just carried on forever by the look of it. And then it broke down over there. So this baseline break, as an example, carried on 196 ticks. So you're going to get situations where the price runs immediately after a baseline break. Like that one over there, 154 ticks. And also during the entire trading day, it went up. This following one over here, you've got 97 ticks. Now there's obviously not going to be a specific value in how far a new baseline is going to run, but it's good to know that there's a high probability that you'll at least catch a few ticks when a baseline breaks. Here is a 500. Now unfortunately on the 500, on the last baseline break, it only went down a small amount of 26 ticks before that baseline break, but that baseline continued for a very long time. So if I just increase the days on this, so I'm going to increase it to 30 days. Obviously the more days you load, the longer it's going to take to load on your chart. And so you just got to let that load up and run. So this is what's going to happen with the trending baseline chart. You've got this opportunity to enter position. So that's just right off the bat. That's not even applying any indicators to a chart or anything. It's just entering a position at the baseline break. I've actually got a strategy, a specific strategy that can enter positions like that. So it can enter positions based on the baseline break. So let me just see if I can look at that. We're not going to really run this strategy now, but I'm just going to apply it to this chart. So there's it's called the Advanced Strategy Line strategy, and you can just put it on one confirmation bar, apply. I think that will actually do it. Let's just see if that actually works on there. Apply. Okay. Yes, so there we go. So that's what it actually has done. So if you look at the chart, it's entering on the baseline break. As soon as the baseline break, it's entering a position. Now that is just on every single baseline break, and there's no value that it's been selected. So if you go into your strategy and you go and disable that and you put a target ticks of 20 as an example, and then you click on apply. Okay, that should have, why did that not, let's just see, it's 200 ticks. Okay, so that should really have done the target over there. Let me just see if there's anything in particular I didn't do correctly. Confirmation bars. Let me just see if there's target ticks to us. I didn't tick the box to use the target ticks. Okay, that's my problem. That's what happened there. So remember, when you're using when you are selecting your target ticks, always make sure you tick the box. So I mean, nothing exciting there. That just exited at 20 ticks. So it closed, exited at 20 ticks. You know, that's with all the big baseline breaks. So if you had to go, for example, and change that to a higher value in the settings, so maybe 100 ticks, and enable that, that's going to have a 100 tick profit target after a baseline break. Then you can go and add your stop ticks too. We haven't added stop ticks, we've just gone and targeted a specific value. So you can set it up like that. I mean, that is just an option to do. However, it is good to just trade this manually too. You know, if you're seeing a baseline break, you can enter it one position. If you really want to run a strategy on it, you can also just go and put on a specific target. So you can go put your daily stop and your daily target, and you can run it for one baseline break. So say for example, you are you activate the strategy on a bar or on a trending baseline like this, okay, and all that you're going to be doing is you're going to be activating the strategy when you see this, and you're going to have exactly like the settings that we had over there, and you're going to put it on as a one confirmation bar. You'll activate it, and you might put your target. So if you work out how much target you want, say you want to do 50 ticks, you can do 50 ticks of profit target, which is let me just see. So you can put your 50 ticks of target profit. You can also work out how much 50 ticks is. So if you're doing MNQ, that's $25. So you can put your daily profit target at $25. You can even make this as 60 or 70, so it definitely hits its daily profit target. And you can make your stop loss as $50 as an example over there. And then what will happen is immediately if this baseline breaks, the price just has to move that value in ticks, and it will lock you out for the day. So that's also a good little way of running the strategy, and for it to act on the next baseline break that may come. So if you put your target ticks in, you put your specific daily profit that you want and your stop loss that you're prepared to lose. So the only time your strategy will lose is if the price goes and breaks a baseline, and then there's a big wick that comes down. That's when you will be stopped out. But if the price goes and hits a baseline and then carries on those 50 ticks, you would have made the $25, and then the strategy will automatically pause until the next trading day. It's not going to enter any more trades up until the following trading day, which is after 6 p.m. New York time. I didn't really want to cover the strategy in this video, but that's just an idea that you can experiment with and you can look at. And remember, it's only going to enter a position after a baseline break. It's only going to enter a position after a baseline break. Okay, so we've set up this chart. It's showing you, the trending baseline. Now we can also look at a flat baseline chart. So I'm just going to duplicate that in a new tab. I'm going to right click on the chart, and I'm going to change this around. So I'm going to make this a 501, and let's load 20 days. That should be more than enough. So a 501 chart. So what this does is this is going to show a flat baseline and the deviations in price from that baseline. So you could also apply that strategy to this chart. So I'll just pop it on here just for interest sakes and just see what it looks like. Okay, enable, apply, and okay. So what this will do is it's going to enter. Okay, it doesn't work well on the flat baseline. I just remembered something here, because what it does is it's going to zigzag on every bar cross. So what you actually have to do with this is you need to increase the confirmation bars to 2, and that will actually will change the value. Yeah, so not the greatest setup, but what it basically does is it's going to monitor the price. It's going to wait for 2 bars to close after a baseline break. So it's going to count the baseline break as well as the following bar, and if that is above the strategy line, which it is there, it's going to buy. And it's great if you're in a situation like this and you've got it's really good in a situation like that where the price is running straight up because it's ended up on almost 1,000 ticks. But it's not too good if you're going to have the price just drop by 1 and then rise up by 1, and then it'll do that. So, probably not the best size bar to work on for this specific approach. But it's also the type of approach where it will enter a position on a baseline break. So I'll go and remove that strategy also. And there's much better bars to use for that strategy. But with this, we've got, I'll just get rid of this thing over here. So when you're looking at a baseline chart like this, so let me just remove the trading hours break line again, because it just gets in the way. It's a bit confusing. Okay, so very often, you're going to get the price running the baseline like it does over there. The price breaks a baseline. It'll either continue like that for a long time. What ultimately also happens is it can form a new wick. So if you go onto your data, if you go into your indicator list, you have got little indicators here. So if you remember watching the indicator videos, you're going to see the indicators that's going to give you an indication to help you where price is. So the tick distance counter and the ticks, the wick trader flat baseline. So those are the two that you can load on this chart. This one's going to automatically work out how many ticks the price is away from the baseline, and this one is going to tell you the percentage of price movement from the baseline. So on that chart, we've got a 500 chart, so I'm going to put 500 in there. Apply and OK. So this indicator, the flat baseline and the trending baseline one, actually has audible alerts. So you can go and choose your audible alert for when the price touches different levels. So if you want to be alerted when the price hits the 76.4 Fibonacci level, you can put that in into there and enable the alert. And what will happen is if the price comes and touches it, it's going to send you an audible alert. Then you can flick to that chart. I think it will even email you because if you've got email set up. And then you can actually flick to this chart and you could decide, should I enter into a position on this trade? So this is going to cover, it's probably going to cover over, it's going to cover over over a few trading days. But what you can do in this situation is you could actually enter a position on the 76 point like that after you get that alert, and you could have your stop as where the price would go to form a next baseline, which is 124 ticks, and then you could have your target as back to the baseline as 375 ticks. So that is something that you would obviously need to leave for a few days. You can't have exit on. I mean, you got to make sure that you've got enough margin in your account, enough funds to be able to handle overnight or over a few days of positions. But if you've got a larger account of a few $1,000s and you're trading a micro, MNQ, those are little trades you can take. And 375 ticks, if you look at at what that is, that is going to equate to $187. So that could just be your one trade for the week. That could be your one trade of the week, and you let that run until it exits. So it's either going to lose $62 if the baseline breaks, or it's going to make $187. Yes, it might take 2 or 3 days, but that is what you are going to be expecting on your account. And that can happen on all different types of charts. So like over here, for example, you had another trade, another opportunity where the price went all the way up to past the 76, went near the price of the next baseline. So there's the baseline there. It went near the next baseline, but came down and touched the baseline. So that there would have been another 376. So if I just go into properties of the indicator and I change this to currency and I save this, it's going to stay on dollar value. So that there's another $180. Then you could do the same thing on the following trade. You could have the price alert you, or you could even put a limit order in place once you know where that level is, and then it'll be another situation where you've got another $180 profit, and put your stop over there. So just by creating an ATM order, you can actually select a value and you can put your limit order in place. Like as an example, you can put your sell limit, if the price was over there, you put your sell limit on that marker over there, and you've programmed in your custom ATM. So let's do this properly from the beginning. And let's pretend the price is over here. The price is running the baseline. The price has got to a new baseline. Yes, we've had a few losing positions over here. We've had one successful position over there, and we've come to this. The price is running the baseline. So we're going to work out now, okay, fine, we've got our Fibonacci tool. It is going to be so many ticks away from the baseline. So let's work out the properties. Let's go back to ticks and save this again. Yes, okay. So basically on this, we are going to create an ATM where we have 130 stop and 390 target. So that's what I would do. I would do, you can just put it slightly above where the baseline would break. So you could have 130 target and 391 stop. Or 395 even. So then you go to your ATM and you create one over here, and you go, I'm going to have a stop loss of 130 and I'm going to have a profit target of 395. I'm going to save that as a template. I'm going to call it 130_395. I'm going to save that and I go OK. And then what you do is you go and put a limit order, a sell limit order on that level where the 75 or the 76 Fibonacci is, and you let it go. And the moment that order is filled, it's going to automatically put your stop over there and automatically put your target over there. So that is what what can be done with these type of charts, and you can do this across any chart. I mean, whether it's the trending baseline or the flat baseline or any of the charts, you can just even go and put in manual positions just like that, where it's going to give you high probability. It's going to give you a high probability trades. Yes, you're going to have a few times where it's going to be dropping out. You could even use an ATM where you have got 3 entries and 3 targets. So instead of having one entry over there that goes all the way there, you could have 3 entries over there, one that exits over there, another one that exits over there, and another one that exits over there, or 4 entries and exit 1, 2, 3, and 1 at the baseline, and then have all the stops in one position. So it all depends, what your specific risk tolerance is and what your specific account balances are to be able to handle that. So that is the flat baseline and the trending baseline. Now I'm going to activate, so this is a 330. I'm going to go and put an indicator on here called the same indicator as the last one, so the tick distance counter. So tick distance counter and the trending baseline indicator. I've got a 330, so I'm going to put a 330. Okay. And I've also got a 195, so I'm going to do the similar thing on this chart. So first of all, I'm going to remove the trading hours line. Okay. Then I'm going to go add those exact same indicators to this chart. So I'm going to use the tick distance counter and the trending baseline, and it's a 195. So that'll load it on there. That's loaded on there already. So this is the 330 chart. So the price is currently 196 ticks away from the baseline. It almost hit the 76%. And since it hit the 76% or very close to it, the price has dropped 66 ticks. And that's what's happened. The price went up, it's dropped to this value. So those are the two trending baselines. One, a smaller one that broke up, and then a larger one that has gone up, and there's a chance it might come down. There's also a chance it might go up and break to the new baseline. Okay, so that's that. This is a much larger chart. I'm just going to close this one for now, and this one over here is fine to leave. So if you look at these two charts, we've got the 500 chart with a flat baseline saying that there's a chance that this is going to go up, and then we've got a smaller baseline saying there's a chance of it going up, but then we've got a larger baseline on the trending that says that there's a chance it's going to come down. So there's a few different short and long term plays in effect here. So let's go and look at how we can set up a signal chart to be able to see when we can enter positions. So I'm just going to limit the size of this chart. I'm going to switch to this one. I'm going to look at this one also. I'm just increasing the sizings. So that's going to give me those three charts. Looking at them now, I'm going to right click on this chart over here. I'm going to go duplicate in new window, and that's just going to quickly create me another chart. So instead of going to your control panel, going tools, new chart and all that stuff, or just go to new chart, this is just going to quickly duplicate a chart. And then what I'm going to do is I'm going to put a chart underneath like that, right click on it, and I'm going to remove the indicator first because we don't need these specific indicators on this chart. And I'm going to change the data series of this chart. So let's work with an 8 and an 8 chart with 5 days. Now you can go and use analytical bars on this specific chart. So you can use analytical bars, and you can also use a custom range. So I like to always go from the beginning of the week. And there's a good reason for that. So you can choose the beginning of the week or any of the previous days. I'm going to go from the beginning of the week because I'm going to be running a optimization on one of the indicators. So I'm going to select the 23rd of May up until today. Hang on one second. Today is the 1st of June. So it's not the beginning of the week, it's the beginning of last week. So being a holiday in the US, yesterday, which is the 31st, the market wasn't in actual fact, so it wasn't in real force. So I'm going to go the 23rd, which is the beginning of last week. So if this was later in the week, like Wednesday, Thursday, Friday, you can choose the beginning of the week. So you can just make sure there's a few days before that you can actually bring up data on. But we're going to work with the 23rd up until today. And I'm going to put break at end of day, and I'll use instrument settings, which will be fine for this specific chart. So I'm going to set that up, and then what I'm also going to do is I'm going to set up another instance of this data series. So I'm going to click back on here, click on MNQ again, and I'm going to use the same settings. So you can see it's used the same settings for the chart, but on the second chart I'm going to make the data series a 16 and a 16. So the same custom range, and the only other thing you need to do is come here to the panel and select panel 1. So once you've done that and you click on apply, what it's going to do is it's going to combine both of those data series on one panel. And then we don't need to see the 1616 bar physically, we can just see the 88. So what you can do now is go into your candle body outline, your candle wick, and your bar, and make all of those transparent. So by making those transparent, it's just going to hide those bars physically from view. Apply. So then we should only see the one bar on the chart. Okay. So now that we see the one bar on the chart, now we go into our indicator list, and we can load up 2 instances of the ultimate band. So click on it twice and apply the first instance of it to the 88, but apply the second instance of it to the 1616, and click on apply. Now what that does, it's going to give you the 2 data series, but it's going to hide the 1616, but it's still going to show you where the where the bands, or where the price has hit both of the bands at the same time. Now, unfortunately, looking back at a chart, it's going to show you repainted bands. So it doesn't help looking back at a chart and say, oh, these could have been amazing signals, because these bands are moving with price as they go. But it is going to show the last successful turnaround point. Okay, so once you've got those loaded, we're starting with our signal chart. So this chart is what we call the signal chart. And I'm also going to go and add on another indicator, which is our shadow trading indicator. Now you're going to find that the shadow trading indicator is going to be on most of your charts, most of your signal charts, just because it provides really, really clear signals of where price is going. It gives a really clear indication of who's in command of the price. So that is an extremely powerful indicator. You've also got sound alerts that you can take advantage of. So if you want to be alerted for the arrows on the chart, if you want to be alerted for the divergences, you can actually select the sounds, and you can even make your custom sounds for that. So you can create a custom sound saying, you know, divergence MNQ, and then you can select that on your chart. And if you've got a specific time frame that you want to look at, you can say divergence MNQ 88 bar, and then you know which chart to switch to. But I'm just going to apply that to that. Now the shadow trading goes on the 88 bar. Okay, you can theoretically add it to the 1616, but I'm just adding it to the 88. I'm leaving it on each tick, and I'm clicking OK. Now as soon as you load up this indicator, it's going to show you this red line. So if you load up this indicator, and if you have been playing around with the chart like this, you might notice an F on the top corner. That's for the scaling. So always make sure that there's no F on the counter or on the top of the chart, and always make sure that this red line is just within sight of the chart. So if you notice anywhere in this vicinity, the momentum line stays in place. If you are moving it too much or too little, that momentum line is going to be out of positioning. You see how it positions? Very important with this specific indicator, that when it's on a chart, that there is positioned accurately, because that's the only way that this indicator gives a really powerful signal. Okay, so we are seeing at the moment the last signal on this specific chart was when the price was running the baseline. So what happens with this is the price is going to break to a new baseline. It's going to run up in price. So if we look at the top chart, let's have a look at this one here, 13651, and we'll look at the bottom chart. So you can go and apply this little arrow, this one here, and click on global, and you can click this one also on global. And what that does is it shows you the bottom price and the top price together, and it shows you where price was when that happened. So looking back at this, we had this price basically run. I'm trying to find where the start of this baseline break was. So these little arrows that we're seeing over here, so if you look on the top chart, you've got a wick over there. So that was the top of this wick here. So you can't, if you look to the left of the chart now, there's the wick, and this is where that wick was. So what happened is the price continued down. It ran to the bottom of the baseline like it did over there, and the next candle, as you can see, it's rising up. So watch the momentum line, how the price is dropping but the momentum line is shooting up. So what that signifies is a change in direction of price. That momentum line is like a magnet for price. Now sometimes it's going, that particularly wasn't a very, very powerful signal because there wasn't any divergences at the bottom. But it still ended up running up and forming a new baseline. So we had all these divergences over here, but we still got the momentum line following price. So while the momentum line is following price like that, it's still a very good indication that the price is going to be running up. Only at this stage over here did it actually show that this price was going to come down. Now that was high up the bar. So, oh man, I lost the place. It was high up the bar like this. Oops, let's go back, let's go find it again. It was high up the bar over there, and then what happened is the price did come down a bit, but then the momentum line came back to price. So however you're seeing this momentum line over here, it's how it was in real time. So on the far right of the chart in real time, that is the positioning of that momentum line. So over there you're seeing a beautiful signal that this price is going to be reversing. You got your divergences, you got the momentum line dropping, and what happened is it sucked the price down. But what happened too is that the momentum line crossed over price in real time, and that's a good signifier that the momentum is actually shifting. So then what happened is the bar ended up going up, continuing up. A very weak signal there that the price was coming down because the momentum line is with the price, but it still came down right, came down quite far on the bar itself. Oh God, I always lose my place when I do that. So it comes up, it went up again, another indication that price was going to drop, and it kind of floated around. Momentum line changed direction. So as soon as the momentum line changes direction going up, it's definitely time to think of getting out of a position if you are in one, and especially if you're getting arrows in the opposite direction. That's a good indication that there's a likelihood that this price is going to be going up. In this case, there's an arrow going down. That could have been a sell position, but the moment this momentum line comes right by price again, it's time to get out of that order. So it would have been a small loss over there, and you're following that price up. So it's come now right up to the top. It's on a wick at the moment, and the price literally dropped. So that's why I also got the reverse strategy for the Medina wick trader. So this chart on top could be traded with the reverse strategy. So that's also an opportunity to start the reverse strategy, but then pause it at a situation like this where the price is touching the momentum line. So there's a good chance now that we're getting to the situation where this price could actually be going back up to the baseline. So I'm going to take off this this thing that moves the chart, go to the end of the chart, position it. So this over here, even though the momentum line is below price, it is right with the price. So I wouldn't say this isn't a powerful signal to be buying this price back to the baseline, because this momentum line is not giving us a very clear signal. It's not giving us a signal like this, you see, that it's far from the price. See, we've got a big distance between where the momentum line is and where price was. And in this situation, we don't actually have that. So if you're taking a position over here, I would say it's a much higher risk position taking it over here. Even though it still might be successful, you've got a much higher risk because the momentum line is with the price. So if you are going to take a position like that and you want to trade this price back to the baseline like we're doing now, just have a smaller stop, because there's a chance that this could actually come right down again. So these are little ways to look at the chart. This is a much higher risk trade that I just took there. But at the end of the day, we are close to the baseline. There's a high chance this price may return to the baseline just based on the history of the chart. See, you're going to get wicks all the time on these charts. There's going to be wicks all the time. So the probability of the price returning to the baseline is very high. But obviously there is a chance it can break. But this is so much better than looking at a 5-minute chart or anything similar, any time chart, because you don't really know where price is more likely to go, where your profit target can be set, because you're seeing all these different bars on the chart going all different directions. So if I go and duplicate this in a new tab, and I just go and change the data set. I'm going to remove the data series over here. Okay, and I'm actually going to make this a 5-minute chart. So let's just see what this looks like. So this is a 5-minute chart. Now, when you're trading a 5-minute chart and you haven't got this indicator on, okay, you haven't got this indicator on at all. I'm going to remove everything. If you're trading a standard 5-minute chart, how do you know where the hell price is going to go? It's literally, you got no idea what's happening with price. So it becomes a very tricky situation trying to make decisions on a 5-minute chart, because where do you put your target? Where do you put your stop? Where do you put, where do you enter your position? What do you do? So that's why I really prefer trading the tick charts, because it's a lot more fluid and a lot clearer of where price is more likely to go. Now you can with the minute chart, you could go and move your stops slightly better so that they underneath previous lows. But what ultimately happens is, they know what you're doing. The banks and institutions know where people are putting their stops, and most people are going to be trading 5-minute charts, and the banks know that if they want to push this price up, there's a good chance that they're going to just flick the price down to take out some stops if they need to do that. And they know that most people who are looking at a 5-minute chart, as an example, will be putting their stop over there. And that's why often you're going to see they're going to come down, take out stops, and then run the price up. Now, it's not, this signal that we took wasn't a powerful signal on the DTB system, but these are the type of traps that people get into by entering charts or entering signals on a minute chart, on a minute thing. Now, it's probably going to work out okay in this situation, but generally, when you put in your entries on a 5-minute chart, where you often get kicked out. It's like, as an example over there, a lot of people would have seen this price come up, fail over there, seen a candle break below this level, put their entry in over there, and put their stop above where this price was, which is over there. And what happens? Price came up, take them out, and then they're out of the position. So that's the trickery when it comes to 5-minute charts or any time-based charts. Is, you know, the banks and institutions know exactly where people are putting their stops. So I'll close that for now. And with this system, you've got a much higher probability of actually hitting your targets, because you've got a much clearer view of what price is doing, and in that case it makes it a lot simpler to work with. So that wasn't I wouldn't take that position normally, because I didn't get a powerful signal from the shadow trading. So I'm a little bit more conservative in my approach. But this could be something you can just play around with and work with. Like there, the price has hit an upper band. The momentum line is still facing up though, so there's still a good chance that this is going to return back up to that baseline, which is over there. So that's, you know, what's going to happen. And often what will happen is price will come and touch a higher high and then drop again, just to get stops out. So may have enticed people. So a lot of people would have been enticed. That's another thing with the minute bars is, you know, people see the price coming up, they're seeing it failing, and then they're enticed to sell at those levels. They're enticed to sell. And what happens is they're selling over there, they're putting their stops above the last swing high, or whatever they want to call it, and then the banks are taking the price up and stopping them out. So that's why it's extremely, extremely challenging to trade the 5-minute bars, because it's a huge manipulation situation, and it's very unclear what's happening on the charts. It's very, very unclear. So like over there now, we've had an arrow off the band. Now that arrow happened in real time. So this, this at this time over here, it is a good idea just to, close the position, because there is a chance that this is going to fall down again. So that's what happens with the shadow trading. It's going to paint these arrows both above and below the price, where there's a high likelihood of price coming down. Now this could also be an arrow like this, where the price did continue going up, but on a low probability trade like that one was, that would just be a good time to exit. Or if not exit, move your target, move your stop right up. So we didn't necessarily have to exit that position, but you can move your stop right up, so you can at least secure some gains with an order, with a trade like that. And this looks like it's going to go back to the baseline anyway. So this is what I talk about when I refer to a signal chart. Adding indicators like this. Now I wanted to add one more indicator. So there's one extremely powerful indicator to add. And if you just go and add the default settings, because we've got an 8/8 bar, I know that these settings are okay to use with this size bar. But the SI indicator on its default settings is going to give you a clear picture of brick walls. Okay, so the brick wall supports are right at the bottom. Okay, so maybe I can go and edit that. So those brick wall supports are nowhere in reach. So this is where price earlier had come down, failed, went up, failed, and then rose up. So a very good time to enter a position when is seeing these arrows off brick walls. So just by loading the default settings on this indicator, it's going to be painting the price is going to fail at these brick walls, and it's going to more than likely bounce off. And if you're getting arrows like this to buy off a brick wall, that's extremely powerful. Now this brick wall, it will paint until it is actually invalid. So that brick wall is going to stay there all the time until a new brick wall forms, which it hasn't yet. And that new brick wall will either be below the price or above the price. So up until now, this has been the support for price for it to basically continue up. So there's been no brick wall above. But this brick wall, it's first made its appearance over here. So from this point over here, this brick wall started forming. So as soon as a signal of the brick wall forms, it will continue painting until it becomes invalid. The previous brick wall formed over there. And the previous brick wall formed over there. So the previous brick wall, this one over here, it only was valid for a few bars, and then the next brick wall formed. And then that was valid until there. So that's what's going to happen with this indicator, and sometimes you're going to have it in various places, and that just shows you the length of how strong that brick wall is and how long it was valid for. So if you apply settings, if you apply the SI indicator to a chart, it's good to look back on the chart and see how many times that brick wall actually proved to be a solid point of support and resistance. And that's exactly what this one has been doing on the 4-4. Okay, coming back over here, we see the price did rise up a little bit higher. So it actually did go back to the baseline. So we should really have just moved our stop, but that's okay. What happened is the price went back to the baseline. Like I said, I wouldn't have even taken that signal to begin with. But what's happened there is the price has gone back up to the baseline. We've got our divergence arrows to tell us to sell, which is exactly what that is over there. We've even got this connected dotted line. So those are connected dotted lines for divergences. So they are key to see. Now if you go back to your 5-minute chart, you are seeing exactly what I thought was going to happen. Sellers being enticed to enter the market at this point, putting their stops over there just above the previous high, being stopped out. I mean, you know how many times this happens to people is you get stopped out by one tick and then the price reverses and you wonder what the hell happened. Are they specifically targeting me? No, it's using 5-minute charts. You will get absolutely burned if you use 5-minute charts, because they know exactly where you are putting your stops. They know exactly where you're putting your targets. It's all based on psychology, and they've been studying this for hundreds of years. If you do really want to use the 5-minute charts, at least put it in your favor. At least add in some of the DTB tools that will help you determine what they are doing, and help you determine so that you do not be sucked into entries that are actually not valid. So there is the 5-minute chart with the shadow trading indicator, and in this entire process over here, you would only have been selling the price down. So there's your connected divergences, there's all your moves. So over here, unfortunately, it shows the price going up, it shows divergences coming down. Definitely could have entered over there, but what ultimately happened is the price shot up in those 5 minutes, which is another thing I don't like about the 5-minute bars, is you actually got, these bars that can be any length. Like that one was 48 ticks. They could be any length, and then you sucked out of that position because the price moved 48 ticks. Whereas on a tick chart, you actually have a lot more time to prepare yourself, like that for that price to reverse. So I think that was that point over there. So you actually have a lot more time to determine that, you know, this is a time to get out of the market. Momentum line is with price. This price is going up. So if you can, try work off the tick charts, at least until you can understand their incredible value that they actually give. And the DTB analytical bars gives a really good a good painting of the bars to show you who's in control of the price. You've also got the option to go into your data series and amend some of your settings. So you could go for like a 2 and an 8 and a 2 and a 16 as some options for the bars, and that can also give you some assistance in trading support and resistance. And look, when you change the bar size, the brick walls also change. So when you're getting a brick wall like that, selling back down to it, when you get a brick wall like that, the price breaks above, there's a good chance it's coming up. So you can take little scalping positions based on this as well, depending on, you know, all the different bar sizes that you use. Now this isn't my preferred bar size. It does give a lot of very good signals though, but I prefer to work with a much even bar size. So like there we go, the price is coming to a brick wall. Let's see what it does at this brick wall. Looks like it's bounced off that brick wall, so it's bounced through. So this could be another another chance that this price is going to be going up. But the price is still in seller's territory. So because the bars are gold, it means the price is still in seller's territory. And we also have the momentum line facing down. So that was just a small bounce off. A new brick wall has formed. A new brick wall has formed. You see that that last brick wall became invalid. A new brick wall formed, saying that this price is likely to be dropping for a while. So these are the type of signals that the SI indicator gives. So coming back to the data series of the 8-8 bar, and so the 8-8, 16, 16, apply, okay. Okay, so I wanted to run the reason why I also chose that specific data series, or that start date and end date, is because I wanted to use the indicator on the chart. So the SI indicator, the brick wall indicator, if you go into your control panel and you go new strategy analyzer, then what that's going to do, it's going to bring up a new strategy analyzer window, which hopefully will pop up soon. NinjaTrader. Let's just see. I'll try that again. So new strategy analyzer. So this is a good thing to do before you even start trading for the session. Is you open up. Oh, there we go. Now it's opened up too. Great, thank you. So here is the strategy analyzer window. Now the indicator that is used on the signal chart is called the SI indicator. Now the SI indicator is attached to the analytical bars 1 strategy. So that is the strategy that specific indicator is a part of. So you can use this setup over here. So we're going to go and choose optimization, analytical bar strategy 1, and we are going to select a trading type as trend. Let's leave it at trend in this example. So you can optimize trend and reverse, but I want to see the brick walls for trend. and I've got a setting A as 1, and I'm going to choose 30 as setting B, as the second number. Setting B, I'm going to choose 1 and 58. And tick delay, I'm going to just leave that at a 0. So the setting A and B are basically proprietary settings. There's a lot built into the code behind that. I've just made it very simple by calling it setting A and setting B. Tick delay is basically a bar delay. So if you've got an 8 in there, it'll be a 1 bar delay. If you've got a 16, it'll be 2 bars delay if you're using an 8/8 chart. So we're going to be selecting the MNQ, and I'm going to be using the analytical bars because that's what I got on that specific chart, an 8/8, and I'm going to be optimizing from the 23rd up until today. Today is the 1st, so I'm just going to put the 2nd, and I'm going to include the commission, and I'm going to keep 10 results, and I'm going to make it max net profit, and I'm going to run that. So that's only 1,740 iterations of a strategy. So what this is going to do is this is going to give me settings for the SI indicator that have shown to be very effective. So the brick walls, instead of just using a standard default setting for the SI indicator, I'm going to use the setting that this strategy analyzer gives me, because those are the current. That's going to show me the current heartbeat of the market. It's going to show me where the market is currently bouncing off those brick walls and those support and resistance areas. So it's going to be a lot more accurate than just putting in a standard default setting for the SI indicator. So we'll give that a second to load. Okay, so that has now finished running, and we'll look at the strategy analyzer just for interest sakes. So this is giving the results between the 23rd of May and the 2nd of June. So this is telling us what settings have worked the best and how many trades they've executed. So the very best setting was at 27.46, and it made $759 with a 44 drawdown. So that was that specific, over those trading days. But only a few positions a day. So I'm also just filtering through this, and I'm looking for settings too that are going to give me more frequency of trading. So I want to have a look at that too, but also not too much frequency. So I'm looking at the drawdown levels, I'm looking at the amount of trades, and you can go and use settings like this. So I'm going to switch to the chart now, and I'm going to apply some of these settings to the chart and just see what it looks like on the signal chart. So going to the indicator list, and let's try the 27.46 first of all. So the SI indicator, and 27 and 46. Apply. Okay, let's just have a look what that looks like. Okay, so that's for the longer term trades. It's entered trades far from where we are at the moment, so probably not the setting to use. Let's have a look at another one. Let's have a look at the 30.37. So indicators, so 30 and a 37. Apply. Okay, they're not providing any near-sighted signals except for these ones over here at the bottom. Okay, so nothing powerful there. That one will be very similar. Let's see what else comes up. 913. 913. Let me have a look at the 913. So indicators, a 9 and a 13. Apply and OK. Okay, so these seem to just be far off from price. So they worked well up until today. So very similar to the 4-4. So I may actually not be concerned about using that specific setting right now in this. None of those have actually showed good results. I may also just switch to trend and reverse. Maybe I should have done that from the beginning. So the trading type, trend and reverse. I'm going to just run that again using both those. So what it's going to do is going to actually show me more brick walls and more bouncing of price. So I'm going to let that run and then come back to that in a moment. In the meantime, let's have a look at what price is doing. So we've got another situation here where we had our the price return to the baseline and the momentum line is now below price. The price ticked up like that over here. So a small scalping opportunity there for that price to come down, but right now the price is back with the momentum line. So no real time or no real decisions to be made. We've had another opportunity there to actually enter a position. Now again, we don't have a very powerful signal to enter into a trade because the momentum line is right with the price. So we've got to be very careful in this type of a situation. We can go and choose a movement in price. So if I go and enter a buy limit there or a buy, if I go and enter there, I want to make sure that my stop is very close to where that signal was given, and I'm happy to target that baseline location again. But I am very skeptical on this signal because the price is with the momentum line. So this may just be a case of a signal not being perfect, but these are like little signals that you can take while you are waiting for the larger signals, or while you're waiting for the price to actually give you an accurate, powerful signal. So on the 5-minute chart, not looking the greatest. That's showing us the divergences over there. So like I said, not a powerful signal. It is a small little arrow going back to the baseline, and the baseline is close, but it could be a situation where it's just going to continue down. So it all depends what happens with this momentum line. So ideally you want to be taking positions where the momentum line is giving you the clear gap to price, and you want to be taking those running up. So taking signals like this that's why you've got to have a very close stop, because there is that chance that is going to continue running down. Okay, so let's have a look at what our strategy analyzer is coming up with. Okay, so that is still running. It's got the trend and the reverse. Got about a minute left to run. So on your data series if you've got two data series on one chart, you can go to the 1616 or go to the second one and remove the text and marker. So you only see the one text on your chart. You don't see the multiple text on your chart to show you, you know, what the price is doing. So you got that. This is still running. Looks like we're going to our target on this one. So the price looks like it's returning to the baseline, which it did. So, you know, those are signals that you can take, but just be mindful that their percentage is a lot lower than the ones where the momentum line has shifted dramatically. But just using those arrows, you can also scalp the market. And if you notice, you're going to find if you don't have a lot of divergences connected together and there's not a force up, you're generally going to get the price going in the direction of an arrow. And these arrows don't repaint. So as you can imagine, if we were looking at that signal that we got now with the arrow, okay, say that was, you know, say this was the end of the bar, end of the price, and we can't see this arrow here, so these arrows won't be there yet. Okay, they blank, but we see an arrow like this, and we buy over there. The price could come down a bit further again and enter another arrow, and it could come further again and enter another arrow. But notice where that momentum line is. It's above the price. So these arrows do not repaint. Once they're there, they are there, even if they are incorrect in determining the price reversal. So in knowing that, you can actually review the times of those arrows painting, and you will notice that very frequently when they do come up, the price reverses, especially when the price is bouncing off bands. It is unbelievable how accurate these signals are, but you always got to make sure that the momentum line is above the price when you take those signals going up, which gives you the strongest opportunities, and below the price when it's coming down. So right there again, we've actually had the price form a new arrow coming down. So you can also trade arrow to arrow. That's another way of looking at it. You know, trading arrow to arrow or back to the baseline. Okay, so let's see what our new chart has come up with. So we're still looking for those settings. So let's have a look at, let's have a look. So 1213, I'm trying to still find that signal, that correct one. So I'm going to the SI indicator and I'm going to try the 1213, apply OK. Aha. Now that is showing me a lot more. That is showing me a lot more. So that is a good current brick wall to use. As you can see, the last time the price came, touched it over here, it came close to the brick wall. So that was a good one to use. Made $1,000 with a 76 drawdown, 80% accuracy. You can go down again. There's a 1212, so that's another one over there that is similar. So if you go into your indicator list and you change the setting on here to a 1212, which shouldn't make too much of a difference to the positioning of that. No, it didn't actually. Just very slightly, maybe historically, a few trades here and there. So once you've run your optimization, you choose one of the settings that have shown you really good results, like we've done over there, a 12 and a 13. You can go and minimize that specific strategy optimization, and you can go and use that setting in your SI indicator. And that's going to give you the current best positioning of your brick walls, so that you know, you can see what price is doing and where those points are, that there's a good chance price might be struggling to break through. And ultimately what's going to happen, there'll be a brick wall more than likely coming on top of the price, and then that'll force the price down. So this is one of the signal charts that I really like to use. 5-minute charts, not so much. So there's a signal chart we're having this price run the baseline now, so that's still rising up. What we can also do is we can duplicate this in a new tab, so that specific one. We can go into the indicator list and we can remove some of the indicators. So we've got on there, we've got the ultimate bands on our first chart. So let's remove the ultimate bands from this chart as an example, okay? So we only have the shadow trading and we have the brick wall, because the brick wall I think is very, very important, but the shadow trading as well. And then instead of adding the ultimate bands, let's have a look at the at the trend following. So trend following is going to give us it's going to draw us the support and resistance bands below price. So that's another really cool indicator to use, and that's basically going to give us the current support of price. So having a look at these different charts, you can be flicking between your signal charts like this. You could be seeing signals being generated. So like when I took the signal, I thought this isn't a very good signal, but had I known there was a brick wall there, I probably would have been more excited about that position. And also with this type of situation, you've got your trend following band, so you also have a nice barrier here of support to be able to hold your price. So when the price comes down and bounces off like the trend following and a brick wall, especially like this, you could almost put your house on that when this type of thing happens, when price is bouncing or resisting off a brick wall. So these type of signals are so powerful to take, and you're using your trending baseline and your flat baseline chart, you're using them as guides of where more likely is price to be going. So we're having a huge run up at the moment on the smaller chart, and we've got the 500 chart showing us that the price is more than likely going to be going back to the baseline. We have the 330 chart where this price is rising. There's a chance that this could actually be forming a new baseline going up. So there's all these little factors that could be of assistance in determining where price is more likely to go. Now, you could also decide on this chart, we are currently 57 ticks away from a baseline break, but we are 207 or 290 ticks, 275 ticks away from the baseline. That could also be a trade where you could set that up and let it run down, but I'll be more reluctant to do that based on what price is currently doing. So there we've set up two signal charts at the moment. We're getting to a situation here where momentum line is dropping. We've got some connected dotted lines for divergences on the shadow trading. Still not a very, very powerful signal, because we haven't had the price spike up enough while the momentum line was down, and the buyers are now in control of price again. So the price dropped slightly, buyers are back in control of price. We've got to just see what is going to happen with that. So high likelihood of this price rising to go back to the baseline. That doesn't mean it won't fall down. It could not fall down for a while. But just based on where this candle went to and where it's now, there's a very, very, very high likelihood that this price is going to rise by another 110 ticks in the next short while, because it failed to come down and break to a new baseline. And this is definitely looking like it's going to be breaking the baseline, because we've only had very small wicks since this one here. So on the previous baseline, we had a lot more wicks that were forming. This one over here, slightly less and a lot smaller. So there's only been one real big baseline. So you can switch between your trending and your baseline, your trending baseline charts, your flat baseline charts. Look at the signal chart. Again, over here, you can right-click, duplicate in a new tab, and you can review indicators again. So you can go and review which indicators you would like to pop on this chart. So trend following, we've got it on the previous chart, so let's remove that one. And now let's have a look at the trade support. So trade support is really handy as well. It might take a few bars for it to actually load because it works out the time and sales, and it's got to calculate a lot of information. So it's going to say calculating for a while. So while that's calculating, you just got to leave the chart. Don't go and click on the chart or anything. Just let it continue thinking, and basically just follow the price. Follow what the price is doing. We're having a bit of tug of war at the moment between the buyers and the sellers over here. This is still calculating, so we're going to leave that. You're going to find that your system is going to slow down when it's calculating. You can see I'm moving the mouse, but the chart is struggling. I'm not clicking on anything because it'll definitely crash if I clicked on it. So just go a little bit easy on the charts while you're loading your indicators. So we'll wait for that one to load and then see what that looks like. So this is what I would like you guys to do with the tools for now, is while you're just becoming familiar with them, is loading up your signal chart and doing some manual positions, doing some manual trades back up to a baseline. If you're seeing a nice big wick and you're getting a really good signal on your signal chart, take your positions, and then as you become familiar with the basics of the DTB system and the basics of the indicators and how to read the signal charts, it's also really good to run playback, so you could get a good feel for running the playback, especially over a weekend. You can speed it up nicely. You can look at the charts in fast forward, so you can see how the indicators are presenting the signals. And then once you've mastered this and you've got some runs on the board, then you can actually go and look at the automated side of it and enter positions or activate strategies, do your optimizations, all of that. There's plenty of time for that, but in this this type of trading is absolutely brilliant. Here the trade support has loaded, so that's giving you a good indication of who of holding a trend. So it's a little bit all over the place at the moment. We've had it going up, coming down, going up. So we've got to just monitor what's happening there. This type of thing is good if we are looking at entering positions and staying in a position for longer. So sometimes you're going to get these trends running for longer periods, and in that way you can stay in a trend for longer. So if you're in a position and that trade support is keeping and it's holding the price, that's a good indication that that trend is continuing on. It's only when that price gets back up to the trade support do you know that there could be any direction of that trade movement from there. So we've got a bit of a downshift at the moment. So I would have liked this. This price to just have come down a bit, gone up a bit like that, with the momentum line staying down, and then that would have been a beautiful time to enter another position over there as a sell to come back down in price. So you're not going to always get the absolute perfect situation. So like there we only had a single divergence. So we had the arrow, and then we had one connected dotted line candle, and then it kind of just ran down from there. So often you'll get a three point. So it'll come 1, 2, and 3. So like a 3-step. You're going to notice a lot of those 3-step type of signals. I'll see if I can locate. There's quite a few that happen all the time where it goes 3 steps. Maybe not on this specific bar. But as you notice there, while watching the chart, you can notice how accurate these arrows are in determining where price is going to be going. Good, so that's almost an hour and a half of just reviewing the signal chart and reviewing, the flat baseline, the trending baseline. So I really hope you guys learned a bit from that, and it's going to give you some confidence into taking either scalping positions, taking positions back in the direction of the baseline when you're getting good signals. We could be shaping up for another beautiful signal over here, bouncing off the trade support or bouncing off the brick wall. And that could be another situation where the price could be returning back to the baseline once we get that type of a signal. The price is either going to come right down and break through this brick wall, which is another 54 ticks from where price is right now. So if I go and measure that, it is probably so 54 is around about there. It's around about the 50% mark. So if price comes down and touches this brick wall or comes near to it, that means that the price will come right down to the 50%. And then that's a chance there to say, I'm going to enter a 50% risk reward trade. So I'm going to do a manual trade. I'm going to have my target as the baseline, which is 100 ticks. And I'm going to have my stop as 100 ticks. So it's a 50-50 risk reward trade. And you set it up, especially if the price comes down and bounces off here. That's it. You set that up and you let it go. You just let it go. You got your 50 risk reward, and those are also great little scalping trades. So that's the cool thing about loading up signal charts, is you're looking at all different types of indicators, and you can see how beautifully they work together. So they're designed to work beautifully together. The brick wall, the arrows from the shadow trading, the divergences from the shadow trading, the ultimate bands, the trend following, so many incredible tools that work beautifully together to give you those really powerful signals. So thank you for staying with me during this hour and a half. I hope you've learned a lot, and I look forward to your feedback to see what you can make of this system and what ideas you come up with. So